Hi friends, welcome to my 10 cent. In this video, we will talk about real estate market cycles. Now, if you have considered investing in real estate, or if you are an investor in real estate, or if you're thinking whether this is the right time to buy, it is very important, irrespective of where you are placed on the spectrum, to understand that real estate market also goes in cycles. And it's very important to understand the real estate property market cycles to ensure you don't lose money while investing in real estate. And real estate is a bulky investment and mistakes are going to be extremely costly. So you just cannot afford to make them. In this video, you will learn all about real estate market cycles. If you look at real estate market, just like with any other investment, it also moves in a cyclical manner. If you've done research and you can watch other videos on our channel, we have talked about how stock market goes in cycles of 3 to 5 years, how gold cycles typically can be around 5 to 6 years. Interest rate cycle when it comes to debt mutual funds or fixed deposits again goes in a cycle of 3 to 4 years. You can always find that there is a cycle of up and down associated with any investment product. Now, why is a cycle there? That also is covered in a separate video. You can find all the details in the description. But for now, just stick with me that all investments go through a cycle. Real estate is also no different. If you look at real estate cycle, first let's look at it on an international basis. On an international global basis, when I did my research, especially for developed markets like United States, US, you can find that real estate cycles are about 15 to 18 years. In fact, there is a research paper you can find on internet which I came across, which talked about real estate cycle running at roughly 18 years, dating all the way back to early 1920s. Okay. So that set me thinking, what is the real estate cycle in India? In India, can we find research? And I set out to figure out with my sources and industry experts and internet and various sources. I've also been an investment banker who's financed real estate industry for almost a decade. But I realized that there isn't enough literature out there, and partly one of the biggest reasons is that India and Indian economy really opened up only in 1990s. Before 1990s, there was no detailed research about real estate. So I decided to look at data from 1990 onwards. Now, if you look at the data from 1990 onwards, the next 30 years, we can find that there are 3 real estate cycles. I could find 3 cycles. First cycle, 1990 to 2000, 2001. Second, 2000 to 2010-11. And then 10-11 to 21, 22, wherever you're sitting right now. Now, when I analyze these 3 cycles, we could find a clear pattern of real estate market going up and then reaching a peak and then falling down or going flat. There was a clear evidence of a phase when things were looking okay, and then there is a lot of excitement, and then a phase when real estate was probably the bad or the worst investment you can make. Classic symbol of a cycle. So let's look at the first cycle. In 1990, when Indian economy was opened up, when Dr. Manmohan Singh as finance minister liberalized the Indian economy, there was a lot of excitement suddenly. NRIs and people of Indian origins, PIO as we call them, invested a lot of money in real estate. So much money came into real estate that from 1990 to 1995, real estate prices went up many times. To give you an example, in Nariman Point in 90, the property prices were about 5,000 rupees per square feet. By 95, the property prices had reached almost 35,000 rupees per square feet. That is 7 times. Okay, in just 5 years. But clearly, nothing had changed in India so much to justify a 7 times increase in real estate prices. Yes, India is opening up. It was the dawn of a new era, but a lot of work has to be done. And whatever excitement that India was witnessing at that point of time required not just 5 years of work, it required many decades of work for that to be a reality. So, real estate market soon realized that the whole excitement had gone way ahead of the reality, and the market started correcting. In fact, 95 to 97 was probably the most brutal phase when real estate market fell by 20-30%. And the decline continued, and real estate market ended the cycle or settled into a bottom somewhere around 99-2000 and stayed there for a couple of years. That marks the end of the first cycle. In fact, I remember in early 2002 or thereabouts, when real estate broker pitched to me to buy some real estate properties because he felt the market or the time was right to buy. And I remember sitting on the fences and thinking to myself that the property just fell, people have lost 40%, 4-5 years back. Maybe, I shouldn't get into real estate. And I never knew really about any real estate cycle at that point of time. So I did not buy any property. I just sat on the sidelines. By 2003-04, things started turning around. Property sales started going up, new projects started getting announced, and suddenly the market picked up speed. In fact, by 2005-06, the real estate property prices had already crossed the peak of the first cycle, which happened in 95-96. I think Nariman Point, to take an example, started reaching 30,000 plus square feet levels in 2005-06 or thereabouts. From there, the market continuously galloped up. In fact, I clearly remember in 2007, one day evening, sitting in with a real estate developer who asked me that I better be quick in giving the down payment, because if I wait for another 3 more days, he will increase the property rate by 300 rupees per square feet, which is almost a 5 or 10% increase at that point of time. And I was like, wow, what is happening? Whether I bought property or not at that point of time is again a different question. But the markets were very hot at that point of time. It was too hot. But again, by 2008-09, the markets settled down. There was a subprime crisis, and the real estate property market, this time it did not fall. It went into a lull, a flattish curve. I think from 9, 10 onwards till 11, almost 12, the market was just flat. That kind of ends, in my view, the second cycle of the Indian real estate property market. In the second cycle, unlike the first cycle, after hitting a peak, the market just slowed down into a flattish, marginally downturn. With maybe some overheated, highly expensive places went into a 5-10% fall or thereabouts. Not like 40% seen in the first cycle. Then 2012-13 onwards, again the market started developing a lot of momentum. Property prices started increasing. In fact, 13, 14 and 15, RBI publishes this housing price index, which you can pick from RBI website. It's published every quarter. You would find that real estate property markets have delivered 20 to 30% growth in that phase. I think 2016, early 17 was when the market again hit its peak. 17 to onwards till 21, and especially the last 2 years, 20, 21 and now a good part of 22, the property market has practically not moved. So in the third cycle, which is from 2010 to 20 or 2011 to 21 as we call it, the market peaked around 15-16 and then went into a flat to negative phase. Some parts of India, especially where the property prices were really overheated, like South Bombay for example, there was a fall of 10 or even 15% in many property prices. But if you look at country as a whole, it was largely a peak, gradual decline and a flattish phase. Now you need to remember, if real estate property market is flat, you are still losing money because most of us would have bought the property by taking a home loan. And the interest meter is still running on your home loan. So even if the property prices doesn't grow, if it stays the same, you are still having a loss of 7 to 9% depending on where your home loan rates are. So this, in my view, marks the end of the third cycle, somewhere around 2021 historically, and I'm purely taking this view basis data that is available from 90 onwards. Now comes the big question. Are we at the beginning of the fourth cycle? I think we are at the beginning of the fourth cycle of Indian real estate. If I were to look at the last 3 cycles, I can prepare a list of 2 or 3 items which are common across these cycles and which indicates the beginning of the next cycle. First, a new cycle typically starts when the existing cycle sentiments is at its lowest. when people think that there is no dawn and the night is at its darkest is when the next cycle begins. And this is just not true about real estate, it's true about all other or any other cycle, whether it's stock market, gold, commodity, any seasoned investor will tell you that. Right now, real estate sentiment has been at its lowest in the last 10-15 years. In fact, I know a lot of my friends who have either exited or are looking to exit their real estate investment. So I don't think this property market can go any further down. So to my mind, that's the first step. Second, for any real estate cycle to begin and to develop some feet and to grow fast, it's very important that the property is affordable to the wider public. So I went and did an analysis of the affordability of real estate today compared to the last few years. Now, there is no easy number or a ready number available out there that you can pick and understand. So what I did is I went to RBI website. RBI publishes something called as the Housing Property Index. RBI publishes it on a quarterly basis for major cities in the country and also for the country as a whole. In my view, this is a good proxy for the real estate market. RBI also publishes something called as a per capita national income, which again is a proxy for the income levels available in the country. This is not a perfect number, but it's a good estimate that we can get. Now, if you take a ratio of property index, which is the property price levels, divided by the national income, which is basically how many times the national income is the real estate property prices. It, in my view, gives a good proxy for affordability of real estate. How many times your income as the property prices. If you plot that over the last 10 years, you can find that the affordability today in 1920 is at levels seen closer to 14. From 2014 onwards, real estate kept on become unaffordable till 15-16. After that, the property prices have not increased much, whereas income levels have consistently been increasing, especially for the middle class and upper middle class. So today, the affordability of real estate is at levels seen 5 years back or 6 years back. So affordability is much better today. Second check. Third, most of the real estate purchases happen on the back of loans and debt, home loans. Home loan rates are at its lowest ever in the last 10 years, which basically incentivizes people to borrow and buy more houses. 3. 4. The real estate supply over the last 4-5 years has been very less. With real estate market going into a difficult phase, most of the real estate developers have produced lesser apartments, and also with new regulations like RERA, it has been tougher for real estate developers to develop large real estate projects. As a result, the supply has been at one of the lowest. In fact, if you read any research report, you will also find that real estate inventory levels are also way lower than what it was the last 3-4 years. Supply is low. Now, unlike something which you can quickly produce, real estate, even if the demand comes, still requires 3 or 4 years to develop an apartment or a house. So you cannot quickly produce or quickly increase supply to meet the demand. So if I look at all these 4 aspects, the sentiments are already at the bottom. Affordability is much better. Home loan rates are the best probably you can ever want. And the supply is not really there. I think all these 4 indicate we are at the beginning of the next property cycle. Now, if history were to repeat, the last 3 cycles were roughly 10 years each. If that is the case, then, and if this is the beginning of the cycle, then the midpoint and the best time for the cycle should come somewhere in 25-26, with the cycle tapering off in 28 or 30. Now, I'm not an oracle, I'm not a soothsayer, I'm just making an estimate and a very good educated guess on the basis of the last 3 cycles. And I may be perfectly wrong, but that's okay. That's the fun in the whole process. But my view is we are at the beginning of the next cycle. Does that mean you should or I should rush and go and buy a property? I don't think so. Why? Because real estate investment has a lot of pitfalls and challenges. You should watch my next video on pitfalls and challenges in real estate investment to get an insight on how careful one needs to be when buying real estate. The link is there in the description. Till that time, I hope you found this video educative and more insightful. If you like the video, please encourage us with a like button and do subscribe to our channel and spread a word around and share with your friends. Take care, stay safe, happy investing.